So we'll start things off here with our crypto fundamental research summary. And speaking of themes, our current themes are institutional adoption, regulatory clarity, the post-halving correction that we're going through right now, the AI crypto convergence, stablecoin infrastructure build out, and an altcoin season deferral. And so these are what I believe are the current themes that are important for active investors in the crypto market. But we'll start things off with the general market outlook. And you can see that I've color coded different aspects of this slide and the slides to follow, where anything that is red is in a bearish stance, in a bearish perspective. Anything that is green is in a bullish perspective, and anything that is orange is in kind of a neutral, could go either way kind of outlook. And so by you just looking at this slide, you can see, the general market is cautious, but there are some bullish undertones. And so that's how I want you to understand the next couple of slides as we go through unpacking some of these active themes right now. So our general market outlook is the 12-month outlook for crypto remains cautiously constructive. We are in a range-bound to modestly bullish market. Bitcoin, as you know, hit an all-time high of 126,000 on October the 6th, and since then is now down approximately 46% from that peak. Now, the critical distinction from the last cycle, 2021 to 2022, remains intact, and that distinction is the ETFs, the Bitcoin ETFs, the Ethereum ETFs, and the altcoin ETFs. And the flows are now moving more capital in a single month than the miners produce in a single year. And so we have institutional flow dynamics, not just the halving cycle, as the marginal price driver of the cycle that we're currently in. US spot Bitcoin ETFs collectively hold 86.9 billion in assets under management as of just a couple of days ago, with BlackRock's IBIT still leading the charge and being the biggest, most liquid Bitcoin ETF at 52.8 billion. Strategy, ticker MSTR, is one of the big drivers of Bitcoin buyers in the market right now. They've purchased, just in Q1 alone, 89,618 BTC. It's their second biggest quarter ever. Now, near-term headwinds have evolved. We'll get into that here shortly. But one of the things that we're seeing in the market right now is that because of these near-term headwinds, whether it's monetary policy, inflationary outlook, or what's happening in Iran right now, it has caused the ETF flows to fall sharply, 73% to 890 million, as institutional capital has rotated towards tokenized treasury products and stable coins amid what is a risk-off stance, right? And so that's what I believe is our general market outlook right now. Modestly bullish, a bullish undertone because the ETFs are really causing a price to move around, and the ETFs are absorbing a lot of what the miners used to produce, where previously we had miners kind of driving the market. If the miners were selling, the market was going down. If the miners were holding, the market would go up. But now that we have these institutional investors in it, we have 52 billion from BlackRock alone. That is one of the things that is different from this cycle to the last cycle in 2021, 2022. Now, from a regulatory stand, the U.S. regulatory cycle, as you can see, I think is bullish, and it's the most constructive since crypto's inception. So we want to consider what's happening on the regulatory side now to be a structural tailwind. The Genius Act, which we've all heard a lot about and we've talked about in the Crypto Quick Hits lately, is talking about catalyzing stable coins and integrating stable coins into the financial system. We just had an announcement last month from Meta. They are going to be implementing stable coin payments on Meta, on Facebook, on their platform. That is structurally a bullish thing. It just takes one major institution and then the others follow. And so we want to see this Bipartisan Clarity Act become law in 2026, and that will formalize token classification, and enable regulatory structure for digital asset securities, tokenized securities, and the like. Now, the regulatory reflexivity risk is still there, right? We still have AI and crypto protocols which may face governance uncertainty. We don't really know how that's going to play out. And we just had David Sachs fulfill his time as the AI crypto czar. And there's a lot of jokes online about the price of Bitcoin when David Sachs came in to help with AI and crypto, and the price of Bitcoin now. And obviously, it's much lower now, and so not too many people are happy with the price action. Though I do believe that it was really smart for President Trump to have someone like David Sachs in there because he actually knows what's going on and has a history of successful investing in SaaS and just someone who can advise the president and his advisors on what's what the industry is thinking when it comes to AI and crypto. And so there is still some reflexivity that could happen. And so the Genius Act, I think it has to pass, but there may come a time where, we see next week and nothing happens. And then, we get this blank space of nothing going on in crypto for a while, which could cause crypto to be a little more range bound, a little more headline driven, and more attuned to what's happening right now in terms of monetary policy. And so just be aware of that reflexivity risk when it comes to the Clarity Act, and especially around AI, where there's still people, Bernie Sanders, for example, who still think AI is going to ruin humanity. And so there's a lot of, and I don't say that as a joke. That's legitimately, I believe, his stance. And so there's still people that are trying to put a lid on what AI can do. And so if there are any AI crypto protocols, BitTensor, Render, Fetch AI, etc., those may face a lot of governance uncertainty as long as that remains the case. Our current Bitcoin cycle and positioning outlook is that I believe Bitcoin is in a deep mid-cycle correction following the halving. I had talked about the halving not being that big of an issue because of the ETFs. In late 2025, mid 2025, I had a bunch of questions. People were saying, what do you think? Is the halving going to be the top? And the top that we had talked about at the beginning of Crypto Market Mentor in 2023, 2024. We talked about the halving cycle and the top in Bitcoin being potentially in and around October, November of 2025. And I had, that was our original thesis. And then, we saw the ETFs come in. And the narrative really shifted, right? We had really smart people say, you know what, the halving cycle is dead. It's not going to, the ETFs are going to be able to absorb everything. And we kind of saw the opposite. And so, in my opinion, there is still some validity to the current halving cycle. And we see that now with Bitcoin retracing 44% from its 126K high. Now, I look at that as bullish because we can get great buy opportunities, and it is typical for Bitcoin to pull back 30, 40, or even 50% during a normal halving cycle. As it stands right now, Bitcoin dominance is in and around 57%, and the altcoin season index has dropped to 49%. And so capital isn't really positioning into alts yet. We do have some outperformance in patches, but those are very thematic. The exchange reserves are at 7-year lows. And so what that means is the coins that are held on exchanges. As you know, as a crypto investor, you can have coins in a wallet, which is self-custody, or you can have coins on an exchange. And we like to watch the flows between coins going to an exchange, meaning it's probably going to be sold because it's on an exchange, or coins off an exchange. And so what we have seen is coins on exchanges at a 7-year low. And so there's only 5.8% of all the coins that exist, all the crypto coins on exchanges right now. And that, in my opinion, is super bullish because that means that people are buying crypto, long-term holders are buying crypto and then taking it off of the exchange and holding it in their wallet. Why would they do that? Because they believe in it. They want to hold it for the long term. if we look on chain, we see that the MVRVZ score has compressed down to 1.2, down from a cycle peak of 3.8. We also, as you know, last week talked about the perpetual funding rates, and they went negative. And so long-term holders are now controlling a large amount of the supply, and we're seeing funding rates extremely low. And so leverage is extremely low, which could allow prices to rise if we get any good news coming out of the Middle East. So the on-chain structure, as we talked about last week, I had those 4 different points. They remain compelling, but funding is still negative. And so it's, we're not seeing a lot of leverage. That's great. But sometimes we need the leverage because it helps pump prices up. And we're also seeing sub 1.0 SOPRA. We haven't looked at SOPRA on chain in a while, but I did look at it this morning, and it's red. And so, that kind of argues against an aggressive re-entry, which is one of the reasons that we don't have any open ideas right now at Crypto Market Mentor, because we don't really have confirmation of a trend reversal. And when SOPRA is below 1.0, that means that the coins that are moving on chain are being sold at a loss. And so people are locking in losses. Now, again, this can be bullish because the more people that get flushed out of their coins, the less sell pressure that's going to be on there. And we saw that, I think it was just a couple of days ago, one of the Bitcoin treasury companies, Nakamoto, actually sold over $20 million worth of Bitcoin at a major loss. They bought it, I think, around 110,000, 120,000. They ended up selling it in the 60s and 70s. And so we are still seeing people sell a significant amount of Bitcoin at a loss. And as soon as all of that pain selling is done, then we should be open to a potential reversal and grind out of the bottoming formation that Bitcoin is currently in on the chart. Now, when we look at altcoins, a traditional broad-based altcoin season so far is still unlikely. We talked about altcoin season being still low on the chart. That said, we are getting a narrative-driven sector rotation, and we saw that play out recently with cryptos like BitTensor and Tau. A lot of chatter around BitTensor and Tau, a lot of chatter around AI, and then all of the altcoin money kind of filtered into that. And so we are seeing narrative-driven sector rotations, but it really is kind of a stock picker's market right now for crypto. It's a crypto picker's market right now. You have to actually be scanning through the top crypto to be able to pick some of the winners. And I feel like we've been able to do that quite successfully with great trades on BitTensor and on Hyperliquid. Bitcoin, Ethereum, Solana have kind of been grinding out the same base, but we have seen some nice moves in some other tokens. Now, more than 40% of altcoins right now are at or near their lows, and this exceeds the previous bear market peak of 38%. And a lot of that is due to market liquidity. We still have interest rates high. The Fed isn't printing money right now. And so there are a ton of tokens that are signaling a deep selective capitulation, but a lot of them still remain in strong downtrends. Now, 3 dominant capital themes are persisting right now: AI and crypto infrastructure. We just talked about that, talking about Tau, FET, and Render. Real world tokenization, we mentioned that today in the Crypto Quick Hits. It now sits at 26.48 billion on chain, excluding stable coins. And so real world asset tokenization is a legitimate theme that I think could get us some decent trades out of. We're also seeing hype around decentralized derivatives. We've talked about Hyperliquid lately, and Hyperliquid's perp dex has captured 10% of the global perp futures market. Why did that happen? Because they started to allow oil and gold and other commodity futures to be traded on a decentralized exchange. That's really interesting to crypto people. And so now we have crypto native people trading traditional financial assets, but on a decentralized exchange, which is something we haven't seen before. Bitcoin dominance, as it stands right now, is still pretty neutral. It would have to break above 56% to signal early stage capital, or sorry, break below 56% to signal some sort of altcoin season, and that just hasn't happened yet. We do have a pretty nice looking chart on ETH BTC, but we do need to see Bitcoin dominance break down further for what I believe an altcoin season to really get going. Now, in terms of the macro and liquidity outlook, macro remains meaningful near-term headwind with a potential conditional path to a tailwind. The Fed, as you know, held rates steady at 3.5 to 3.75 for a second consecutive meeting in March. And policymakers, as we mentioned last week, are projecting just one cut for 2026 and another for 2027. We had a revised PCE inflation forecast of 2.7%, and that Iran war is really complicating things right now for forward-looking inflation. Now, President Trump did nominate Kevin Warsh to replace Fed Chair Powell when his term expires in May. We do know that Warsh's recent comments suggest a more dovish lean in line with the administration preference, though his longer-term stance remains uncertain. And so he has traditionally been hawkish. He came into this administration, nominated by this administration, flipped to dovish, but now we don't know, obviously, what the future holds, especially if we have the Iran conflict continuing any longer. Now, the Iran conflict is a live and evolving headwind. We know this. We talked about the inverse correlation between oil and the price of stocks. Like the SPY goes down every time oil goes up. SPY goes up every time oil goes down. If we look at oil right now, WTI crude is under 100, and we see SPY, actually strong on the day today. And so as long as oil remains elevated, inflation risks remain elevated, and that could continue to give us a hawkish tone from a bunch of the Fed heads. You may remember last week we talked about all the Fed heads jaw wagging and a lot of them saying, we don't know what's going to happen, so we're not going to do anything. Now, President Trump did state that the U.S. would be finished with the conflict within 2 to 3 weeks, and that's one of the things that is boosting risk assets today and yesterday. Of course, yesterday was the end of the quarter. We talked about that in the Crypto Quick Hits. There's probably going to be a bit of a squeeze. We saw a bit of a gamma squeeze yesterday. We're seeing some follow through on that today. Stable coins have also hit a new all-time high, and so that tells us that dry powder is on the sidelines. $315 billion in stable coins are waiting for the trend to change, and when it does, I think that's going to be ultimately bullish for the crypto market. Okay, now in terms of your portfolio and how to position for this. I talked in my video on Monday about realized price, and I do believe that there's still a near-term crash risk within this cycle. We currently I see 40,000 to 54,000 on Bitcoin as a deep value zone. That means if you're a long-term holder and you see Bitcoin down around 54,000 and below, I believe that that is a great long-term buy opportunity. As it stands right now, we have long-term holders realized price in and around 48,000 and the altcoins realized price at around 54,000. And so that means anyone that is a long-term holder, their average price is around 48K. But if you take all of the coins that are trading on chain, then that realized price is around 54K. And so that's why I believe within that zone is a long-term value zone. So if the market does crash, if for whatever reason this Iranian conflict goes on longer than expected, or if there's any sort of black swan or orange swan event that the market isn't pricing in right now, and it causes stocks to move lower, it causes crypto to move lower, I want to be open-minded from a long-term perspective of adding Bitcoin between 40,000 and 54,000. Now, that's not my base case. My base case is for us to grind out a range going forward. But if you look back, and I did post the realized price chart in the Telegram chat recently, if you look at the realized price chart, you see that in every bear market, and we can consider this to be a bear market or crypto winter right now, in every one of those instances, we have Bitcoin at one point testing the realized price. And so in the back of my mind, I still want to be open-minded to Bitcoin potentially coming down to 54,000 as it has in every other bear market. Now, it doesn't mean it has to happen, but I want to be open-minded to that, and I don't want to be fearful of that. I want to look at that as a deep value zone and a potential long-term buy opportunity. Now, fear and greed, which is something we started including in the crypto quick hits on a daily basis, has been pinned at extreme fear for weeks. We just got back into fear today, which is interesting that we're a bit higher than we were yesterday because prices hasn't really done much. But I think that that's ultimately bullish because we're seeing whale wallets accumulate 270,000 BTC in the past month, which is the largest accumulation since 2013. And so we're seeing a constructive divergence right now between the sentiment and what the long-term Bitcoin money is doing. We've shown you that chart on chain where we've seen the whales stop selling and we've seen the whales start to accumulate again and that curve go up higher. And so the longer term holders are accumulating in this zone and we're seeing it at, in my opinion, historic levels. Now, some of those whales include MicroStrategy or Strategy, ticker MSTR, which, as I mentioned, purchased 89,000 Bitcoin in Q1 alone, its second biggest quarter ever. And that shows us that Michael Saylor is still bullish. He's not quitting yet, right? Bitcoin go down. He's going to be buying the dip and buying the top forever. And so we continue to see that. And we continue to see support for his STRC product, which is the idea is he will pay you a dividend. But he will take that money and he will buy Bitcoin with that money. And the idea is that the price of STRC will remain stable. You hold the asset, you get a dividend, and that's kind of the risk you take. Now, I've seen mixed reviews on this. I see a lot of people say that is one big house of cards, that ultimately it's going to fail. So I would just be cautious of that and size appropriately if you're looking at something like STRC. Now, as I mentioned, a secular altcoin bear market is the base case. We continue to see some of the most well-known cryptos in strong downtrends. We'll look at the charts here in a minute. So I just want to point out that you do still need to be very selective when it comes to your altcoin shopping. We see protocols like Near protocol. Near was as high as $8 in 2024. It's now $1.20. AVAX was as high as $150 in 2021. It's now $9. And so you have to be very selective with your altcoins and really focus on the chart, focus on the narrative, focus on the winners, because they need a catalyst, right? And so that's what we want to do at Crypto Market Mentor. That's what we have been doing. We want to focus on projects that have real usage, strong communities, a collection of holders and people that are passionate about it and understand the protocol, understand why the token exists, and ideally have a visual catalyst for that token. So what I consider as our posture for Crypto Market Mentor and my personal investing is to hold Bitcoin as a core macro hedge. I still have Bitcoin in a wallet. I think it makes sense to own some Bitcoin in a wallet and have selective exposure to AI crypto infrastructure, whether that's via BitTensor, that's the one that I've chose. There's Fetch AI, there's Render. Those all make sense. You can also look at real world asset rails, things like Ethereum, Hyperliquid, and Solana for alpha, and high stablecoin exposure. And whether or not you are able to generate interest with stablecoin, that depends on your jurisdiction. I like holding stablecoins because I can make a bunch of money just by doing nothing, holding stablecoins on Coinbase. And so I think you want to have selective exposure, Bitcoin, something in the AI world, something in the real world asset world, and then dry powder on the side looking for a trend reversal in the entire sector. So that's our crypto fundamental research summary. I apologize if it's extremely wordy, but I think it's extremely important for you to understand these various themes that are going on within the crypto world and how I think we should approach them as active investors.